Before we get started, this season we'll be partnering with a number of organisations also interested in the development of the business scene in East Africa. The first is The Economist, who have the following message. On a continent in which levels of financial inclusion remain low, the potential of fintech services is already evident in the rapid growth of the M-Pesa and MTN money networks. Although M-Pesa remains Africa's premier fintech provider, over 200 other fintech companies are disrupting the economy with new and innovative technologies. The Economist Events Innovation Summit Africa, held in Nairobi on March 6th, will ask what makes fintech in Africa unique and how can its impact be harnessed to deliver constructive economic and social outcomes for the continent. Join the Economist Events experts to explore opportunities and challenges produced by increasing digital transformation in the region, and hear firsthand from global business leaders, policymakers, entrepreneurs, and technology specialists. To register and find out more, please visit the website innovationafrica.economist.com. Hello, and welcome to the East Africa Business Podcast. This show is all about showcasing entrepreneurs who are building businesses in this exciting part of the world. From reading high-level articles about the region, it can be difficult to really understand what's going on, and so my hope is that these interviews somewhat bring it to life, as well as stoking your curiosity to go find out more. On that, do take a look in the archive for more episodes that we've done, but for now, let's enjoy the rest of this funky intro music and then get started with the show. Many international studies have pointed to the lack of SME financing as being a huge blocker to a country's development. In the context of Kenya, many small business owners are excluded from the formal financial sector due to the high operational costs involved with opening and running a bank account. As a result, they have no formal credit history and are not able to get a loan. Pezesha are seeking to overcome this by giving the unbanked their first step on the formal financial ladder. Hilda, the founder and CEO, and I dig into the difficulties of getting a bank account and, by extension, a loan, how Kenya's ubiquitous mobile money network facilitates their business, and how they are layering on their data analytics to the dynamics of the existing social investing culture in Kenya. This is one of those episodes that can leave you scratching your head at times, but nevertheless shows the huge potential for technology and financing to transform a region. Anyway, without any further ado, here is Hilda. Cool. So I'm here today with Hilda from Pezesha. Hilda, welcome to the show.
Thank you.
So just to get us started, can you tell us a bit about you and a bit about Pezesha?
So I'm the CEO and founder of Pezesha. And Pezesha is a Swahili word that means financial empowerment. And that's really what we do. We empower unbanked populations to be able to get access to credit, affordable credit that, helps them to grow up the financial ladder by giving them hope, inclusion and choice and freedom. And all those things in my world, they are completely free. So we bring that hope, which is free, and that inclusion and that freedom to these unbanked populations, to be able to access affordable credit and empower them to the next level of their lives.
Got it. Cool. So you're in the business of giving credit to people, so giving money to people who otherwise can't get access to it.
Yeah, so we're in the business of helping those guys and enabling them by being in the middle of, building a shared economy where we connect them with lenders, but first, before we do that, we understand their behavior and we're able to, use that behavior to then know, how will they be able to grow up the financial ladder. So Pezesha is not a lender, and Pezesha is sitting in between and helping to create a marketplace that, creates that environment of a shared economy and a strong credit scoring system that allows us to be able to use data intelligently to know and understand the behavior of these unbanked populations and then connect them with lenders.
Got it. Okay, so Pezesha is not a lender per se, but you're like a platform where people who've got money, they can say, right, I'd like to
exactly
fund it. Understood. And why do you need to exist? Like, why can't the people, your customers, why can't they just go to a bank?
So the people we are targeting and these are the unbanked population in Kenya, we have more than 40% of this kind of population, this is the unbanked population, already excluded out of the formal financial system.
When you say excluded, what does that mean?
Excluded means, they do not have a chance to go to the bank. This is in a layman's language, to go to a bank and ask for credit or, borrow credit. And also be able to go to an MFI institution and say, look.
So MFI is?
Microfinance institution. Yeah. And say, I am here and this is my credit history and I qualify for a loan to be able to go back and grow my business or be able to have a better standard of living.
Okay.
And so the kind of population we are targeting has purely almost never had a bank account before. They mostly don't have, a way to be able to access, credit in their lives. They don't have a credit history, meaning that they have never actually borrowed from a formal institution and gone there to be able to then say, I qualify, give me a loan, and then continue to build a credit history based on their repayment data or their relationship with the bank. And so we are targeting these people who have never had a bank account, they have never had a credit history before. They have no idea, even where to go to be able to access affordable credit. They take what they get.
I was about to say, so what we're saying is 40% of the Kenyan population can't get a bank account. And just quickly, so in simple terms, why can't they get a bank account?
So it's not 40% can't get a bank account, but it's 40% of the low-income borrowers, that's the unbanked population, have been excluded from the formal financial system. So, if you're looking at the total population of Kenya, and where the majority fall under is the informal sector, where we have a lot of people who are living under less than $500 a day. And, there's...
So $5 a day?
Sorry?
Is it less than 500 shillings a day? You just have less than $500 a day?
No, less than 500 shillings.
Okay, which is $5. That's it.
Less than $5 a day.
Got it.
And they basically are looking at ways to survive. And those people are the majority in the Kenyan economy.
And I might be missing it. Why can't they just go to a bank and get a bank account?
So those people, really, they cannot be able to, the banks consider them risky in the first place. In the sense of, they don't have records to show that they can be able to qualify for a loan. The second thing is opening a bank account in itself requires a lot of huge costs and operating and running it. So these people...
Really? Isn't it costs money?
It costs money to run an account, a bank account in Kenya.
Okay.
Yes.
All right. So each month, so the fact, right, if you were to just have a bank account.
Exactly. So
each month you'd be paying money.
You're paying operational fees to just continue to run that bank account. Every time you withdraw, every time you deposit, and every time you receive money, all that is costs that could be attached to it.
I see. And so we're saying that the low income
cannot be able to afford.
Yeah, they can't afford to simply have.
Yeah.
Got it. Okay, cool. So as a result, lots of people don't have bank accounts.
Yeah, a lot of people don't go to the banks.
And a prerequisite for getting a loan, I imagine, is that you have a bank account.
Yeah.
With which you put the loan in.
Exactly. And that bank account gives you, they look at your history and your activities, and, if you cannot be able to sustain those activities and the operational cost, then you almost don't have an activity going on in the bank. In your bank account. So the low income are already excluded in that sense because of the high operating cost of even running a bank account. And, the moment you deposit, the moment you withdraw, and the moment you continue to transact, there's definitely a lot of fees that continue to build up, which could be a lot when we are talking about the informal sector.
Understood. Okay. And so as a result, that then means it's difficult to, I kind of get it now. So, for example, with me, I have a bank account, and so I can say, look, this is when it's come in, this is when it's got out. Whereas we're saying these low-income borrowers don't have that at all. I see. But I think you alluded to it. They do sometimes take on loans. Who or how do they get credit? Let's say, how would a customer get
Yeah,
credit?
so where now the unbanked populations have turned to is mobile credit, which is now where we have a lot of players who've come in and are offering loans through mobile money. I mean, we have a penetration of more than 85% in Kenya. People using mobile money, and they have mobile money accounts, which continues to grow rapidly every day. And that's not just for the rich, but also for the poor. Everyone has, M-Pesa. And even my grandmother owns an M-Pesa account, and I'm able to send money up country every month, and she's able to see it and able to go to an agent and withdraw it. So that has been one of the most powerful way of continuing with helping these guys to build their credit history and access credit. And so M-Pesa has become almost the bank of the unbanked, and really helping them to be able to access finance, to access, payments, and also to be able to transact with other people, whether it's family, whether it's friends, and whether it's their social network. They're able now to be able to do that at the convenience of their homes. And so we're seeing where a lot of these unbanked are able to access credit through that channel and start building their credit history slowly to get to the level of almost joining and graduating to the formal financial system.
Okay. So I'm right that Kenya's quite unique in that it's one of the main countries that has mobile money and that everyone uses it. And so you're saying that this is, I don't quite, so mobile money is used to send money to each other.
Exactly.
How does that then translate into loans? So does that mean that there's somebody who's got money that they'll send out money via M-Pesa and then people will pay them back?
Exactly. So, I mean, in real sense, that what it is, which is, we have lenders who are able to facilitate the access of that loans through M-Pesa. And you can be able to receive that money through M-Pesa, and you can be able to pay it back through M-Pesa. And of course, what's happening at the back is a lot more complicated. But again, it's just about the channel of how that money is sent and how that money is received. Because that's really what a bank is. You can choose to go to an ATM. You can choose to go directly to the bank to withdraw your money or to deposit it. But again, you don't need to do that with M-Pesa. Everything is just within your comfort zone. And so, the only thing you need to do when you want to withdraw it is go to an agent. Or in this case, if you want to borrow a loan, it's directly sent to your mobile money M-Pesa account, and you can choose to withdraw it, to do, what you wanted to do with the loan. But again, you can choose to take that money and go and reinvest it. So it's just the channel of how the money is sent, which is the M-Pesa channel.
Okay. And so Pezesha, I think it utilizes this M-Pesa channel.
Exactly. So we utilize M-Pesa, we utilize many, many other channels, including traditional channels like Chamas and social networks.
So what's a Chama?
A Chama is, a social network saving group, based within a community setting that come together, with a common goal to save together and driven by, common values. And they want to, use our money for their own social interest. And it could mean, helping each other with their day-to-day or ensuring that, they can use our money to be able to invest back into something that helps the rest of the group. But in most cases, that money is rotated, within the group, and everyone has a chance to get that money within a certain period of time, which of course has its own limitations. But at the same time, it helps the group members to come together and build funds that they would otherwise not be able to access, and really help them to grow, whether it's individually or as a group.
Okay, so this is sort of in an in-person community. This happens in. This is not virtual. This is like an in-person.
Yeah, this is an in-person setting. They come together. They have a date and the place where they need to meet.
And so let's say, what's an example of a Chama? Like, are you a member of a Chama?
I am a member of a Chama.
Okay.
And, one of the beauties of being in a Chama is it doesn't really matter whether you're in a certain class, or whether you're in a low class or middle class or high class. you'll find it's a very common behavior among all the classes, and that's where Pezesha also comes in. We are just automating this Chama effect of social saving culture and people coming together to lend money and borrow from each other in the same settings.
I see. So in the Chama setting, you're saying there are people who they've got money and they're like, oh, I can see that Hilda would like to invest in something. Let's put our resources together, give it to Hilda. I take it Hilda's then going to pay us back with some interest?
Yes.
Yeah.
Depending on the rules of the Chama, every Chama has its own rules and criteria and, what they have agreed upon as principles and their way of running the Chama. So there could be interest rates attached to the pool of money that is crowdfunded through the different individuals. But then there could be, interest-free, also depending on the terms and the period of payment within the different members of the group.
Okay. And so in a way, is Pezesha having to compete with Chamas? Like if I'm somebody, I'm like, oh, I could go to a Chama or I could go to Pezesha. Is there some sort of element of either or?
No, so Pezeshas, where Pezesha comes in the Chama network is really to automate the existing behavior. We bring in a lot of digitization into that sector by helping the Chamas to even know what is their credit scores of their members. How would they be able to use the marketplace to lend to each other in a way that there is visibility, transparency, and also growth and scalability. And of course, more so to be able to understand the behavior of their members. We come together, we might not necessarily know each other, we stay in the same community, but as we continue to grow and do other activities, whether in our business, in our personal lives, how does that impact with our ability as a Chama to be able to, grow to the next level and even get much more bigger financing? So we help these Chamas to be able to understand the behavior of their own members using our marketplace and our credit scoring model. And we also help them to access much more bigger financing than they thought they would, because with that group setting and the ability to save and transact and continue to grow as a group, we're able to understand their behavior as individuals and as a group, and even connect them with lenders willing to give them much more financing than they have never ever seen before, to be able to do much more bigger projects or individual, empowerment that helps them to grow to the next level of their lives.
Okay, so you've kind of got different hierarchies in that there's sort of the Chamas who they're saying, right, this is the money that we've all got ourselves, but is it almost like a fund of funds in that someone else can come and say, I'm going to fund this Chama with the expectation that it will come with a return? Yeah,
it's like a fund of funds, and it's also like, it's like a peer-to-peer network in the sense of, it could be one Chama funding another Chama, not necessarily an individual. It could be an institution funding that Chama with much more. It could be the Chama itself actually funding each other with much more, because now they know who is this person and what's their behavior and all that. So there's really no limitation or how far the possibilities of this peer-to-peer effect can go. It could be, we're already seeing Kenyans through Pezesha lending money to Kenyans they have never met before, with the trust of our strong credit scoring system and our ability to be able to build a shared economy in a much more standardized way and bring normalization into it. We're seeing other Kenyans actually coming in and lending to people they have never met before. But again, they are able to get back their returns. They're able to understand who are those people and continue to lend much more, because they believe that with that purposeful way of doing it, it's not only just helping one fellow Kenyan, but it's actually empowering the whole community of where that borrower is coming from.
So you kind of hinted at it there. So you're saying that you can basically build this layer of trust between two people and between these two parties. And you mentioned something about credit scoring. Can you talk a little bit about that?
Yeah, so credit scoring is a very interesting new area in the credit space. And, there's a lot of ways that credit scoring works. And there's no one way of defining really a good credit scoring model.
The purpose of a credit scoring model is I've never met this person, but they are likely to pay back, or they're not likely to pay back.
Exactly.
Okay,
So
right, so that's fair.
we look at, for us, credit scoring is really two things. Understanding using data, of course, to understand the ability of the person to be able to pay, but also more so the willingness of the person to be able to pay. So we combine both, and we're able to see, where do they lie in terms of ability and willingness to be able to pay the loan back to the lender.
And if they don't have a bank account with all these records, how do you know their ability to pay? Do you ask them how much money they've got? Or?
Yeah, so we've partnered with, different institutions, including, mobile operators, and leveraged on the APIs that already exist to be able to, with the consent of the borrower, get their mobile money transactions over a period of time between 6 to 12 months. That allows us to accurately almost predict what is going to be their behavior when it comes to their ability to repay the loan. This is just with their inflows and outflows of their transactions through M-Pesa, and who they're sending money to and how much they're receiving as well, and understanding their income flow, and building that graph of how much are they earning and where is the estimate and what do we predict. And with that, we're able to then, because these guys are actually using M-Pesa in their day-to-day lives, we are able to see what is their true ability to repay a loan. We rely on other alternative data, but then, we work with also what currently exists and what our customers are using, which is M-Pesa.
See, okay, so you're able to say, let's say, I use my M-Pesa and I go and send you some money, and then go to a bar and have some beers, and then go and, buy some vegetables at the supermarket. You can sort of look in at that and say, okay, Sam is or is not, creditworthy.
Absolutely.
Okay.
Once you give us your consent, we don't own this data. The customer owns the data. With your consent, we're able to look at that data, help you analyze it, and almost build your financial CV with that data. So the purpose of the data is really to help you, know exactly how much you're spending, how much you're basically able to get if you're able to continue with the trend of, transacting digitally, and of course, ensuring that you're paying your loans on time. It's not just Pezesha loan. Okay. So we look at all that. We look at how your behavior is there. And we are also able to advise the customer, in this case, the borrower, to know where to improve so that they can be able to, tighten their credit score and help them to actually grow to the next level of their financial ladder.
I see. Does that assume that a lot of my transactions are happening on M-Pesa? What I'm worried about is maybe it's on both sides. Let's say I'm an absolute saint when it comes to M-Pesa and I'm only buying vegetables and Bibles or whatever.
Yeah.
But when it comes to in cash, I'm actually going down and sort of spending it all at the casino. If you look at the M-Pesa, you'd only see the good stuff. Is that an issue?
Yeah. So that's neither here or there, because what we are seeing with our data right now, and with of course the market facts, is a lot of these unbanked guys are mostly transacting, with M-Pesa, especially when it comes to doing business. And that's what we look at. We don't necessarily...
Just out of interest, how can you tell that?
So, we have a typical case study is most of our customers actually wake up at 4 a.m. every morning to go to a very common market in Kenya called Marikiti at 4 a.m. just to get the best prices. And when they get there, they basically choose the best of the best.
So best
produce.
Of the best? Food.
Like food and groceries and everything that they need to stock in their grocery shop. And when they are paying the supplier, in most cases, it's through M-Pesa, at that time of the morning period where you don't have cash, or, you've just closed your books and you're starting a new day. And we've seen a lot of them paying their suppliers through M-Pesa as a way of just facilitating that transaction to be able to buy more goods at that period of time. And, we, of course, also majority of the transactions are happening through cash from what we've seen with the unbanked population. But again, we are helping them to also understand why it's important for them to build a digital wallet for themselves that is going to help them to continue to build their credit score. So we are seeing a lot of them, slowly getting to that level of transacting through M-Pesa and other digital platforms that help them to continue to build that credit history. So it's going to take time. It's not going to happen overnight. But what we've also done is we've used other sets of data. We've not fully relied on, the transactional bit of M-Pesa. We've then said, look, what is the other alternative data that we can be able to understand the behavior of the low-income borrowers and the unbanked populations? And that's why we've administered psychometric tests, and we have now looked at other sets of data, including utility data, to then help to build a much more robust credit scoring model and continuing to educate. One of the things that we have done really consistently and part of our ethos in how we do our credit scoring is the financial education bit. And so we take the borrower through that process, and part of it is also helping them to understand what do they need to do to get, a good credit score, which includes starting to transact digitally to build that profile for themselves.
Makes sense. I mean, it sounds like you're doing quite a lot for these borrowers. And I mean, does that that seems like it must come with costs.
Yeah, so, the beauty about our model is we have a human component to it. We work with agents on the ground who really help us to do most of this work. We've trained them, we've educated them about, our vision, our culture, and how we want to do this. And they have, basically they're sold into our vision, and they breathe and every day about Pezesha. That's what they do. And part of their job is really just helping us to get quality borrowers on our marketplace, but also to continue with the journey of educating the borrower and helping them to know what they need to do to get to the next level financially, growing their financial CV. And so we've partnered with our champions on the ground to help us to be able to do that. So we cannot be able to achieve that by ourselves. I think with just the Pezesha team, as we are a team of 20 individuals, I think we can only go fast. But again, with the agents we've partnered with who understand the community better than we do, and we've been able to build customer-centric products for our borrowers, and also they've helped us to walk with us through that journey of ensuring we're not just giving credit, but we're also helping this borrower to grow up the financial ladder, the Pezesha ladder, and go to the next level of achieving their dreams and aspirations in life.
Correct. Okay, so the idea is that you'll get a borrower, and then they'll be with you for the long haul.
Yes, exactly. So that's really what we are all about. We want to empower this borrower, but we also want to be able to help them to know what it takes and what they need to do and how they need to do it to be able to then sustain that growth of their financial CV in really helping them to even go up the formal financial institutions where they can walk in a bank and borrow a much more bigger loan to grow their business and expand it, not just to one county, but to the rest of the counties in Kenya.
Okay. So I'm just trying to sort of wrap my head around the business sort of model here. So it's you'll kind of invest in them early on and then do a number of loans with them. The idea being that they'll repay their loans and that will essentially recoup the money that you invested in them.
Yeah.
And then afterwards they'll then go on to the banks where they'll do even bigger loans. Is there not a risk that you've just sort of spent a lot of effort sort of getting people included into the sector to then just hand them off to once they've become a bit more profitable?
Yeah, so our model is really, our vision and summit and why we are doing what we are doing in Pezesha is to be the normalizer of what's currently happening in the credit space. We want to be able to build an ecosystem that is normalized and able to say, the unbanked population are credit worthy, and we do that through a shared economy. And at the same time, we can be able to say to the banks and to the alternative lenders that these guys are good, give them credit at a lower interest. So we're not trying to be a lender. We're not a bank. And that is why we will be happy if our borrowers graduate to the level of being able to get a loan from the bank. What we do as Pezesha is we are in between of bringing that normalization and helping the banks and other alternative lenders to really understand the behavior of these low income people. So that is what our mission is, and that's where we believe we will be able to provide much more value in growing not just the lives of these people, but also the economy. And of course, with that, data becomes a very important component. So we work with the banks, who already have invested a lot into the infrastructure and all these things to then, come in and help and support and fund these low-income borrowers with affordable loans, with understanding the risk and, their behavior. And that's where we come in.
I see. So it's more of a partnership.
Exactly. So we have a partnership with lenders, and we work with alternative lenders to banks, institutions, who are definitely very interested to work with low-income borrowers, but they have no understanding of risk and behavior. And we basically use the data that we have collected to understand these populations to then educate the banks and the alternative lenders on how to go about that lending. So we are a data company. We sit in between and really help bring that, proper way of growing these low-income borrowers and graduating them to the next level of the financial system.
Very good. Okay. We've just got a few more questions. That's all right. I realise I'm not asked how much it costs. Like what if I'm so Pezesha is the platform. So I'm the lender. I want to put money into the platform. What type of return would I expect? And I guess that's linked to the interest rate that the borrower gets. In rough figures, what's...
Yeah, so, a typical, right now, if you put money in the bank in Kenya, and even with some of the credit agencies and platforms, you will be getting approximately between 7 to 12% per year.
Okay, so I've got $1,000.
Yeah.
I just tuck it away in the bank, and then 7 to 12%.
Yes,
doing
exactly.
Nothing.
Doing nothing.
Okay.
7 to 12%. But again,
what's the inflation rate here?
Well,
I'm sorry, that seems quite. Anyway, sorry, I'm coming from the UK perspective, where it's like that.
So if you compare with other countries, that's definitely high.
Okay.
But in real sense, that is not really something that any investor or lender will tell you that they are proud of. They would definitely want more, because their money is locked for a period of time. They cannot be able to withdraw it. It's a fixed account, and you can do anything with that money. The bank has it. And so you're getting only 7 to 12% per year. And, when you look at Pezesha, and, if you remove the risk and, our robust credit scoring model, of course, playing a big role there, we're looking at a return between 13% all the way to 36% per year.
Per year. Okay. So that's like 3% per month.
Exactly.
So if I'm a borrower, is that the price of a...
No. So the borrower pays, of course, with a bit of a high margin on top of it. So, our loan interest will range to something close to 5%, up to 12%.
Okay. So how much are people typically borrowing?
Yeah. So our average loan size is 5,000 Kenya shillings. That translates to around $50.
Okay.
And so that's the average, people are getting that money to buy daily stock or weekly stock for their small business.
See, so I get $50, and then 30 days, is it 30 days?
Yeah,
30 days later,
days.
I pay back $55.
Yeah, exactly.
So the idea is that in that time, the fact that I've been able to buy stock and then sell it accounts for that extra 5. And I imagine this is quite sensitive, so information, so you need to say, are people paying back?
Yeah, I mean, we have been surprised. That's one of the things that has really surprised us, that we thought we will find ourselves in a difficult situation where these people are not paying, notwithstanding our credit scoring and the investment we've made in it, and just getting the data to build robust models. But we've been very surprised that there's very, very many good guys in the unbanked sector who are willing to just grow with us, and they are willing to actually grow up in the financial ladder. So we have a lot of more of those people than we thought, and we are very happy to help them to grow. And that's why we are having different strategic partnerships that could help them to grow to the next level. So people are paying, and people we are targeting are in business. And so we are already seeing that they are looking for ways to continue to grow, not just their businesses, but also their own lives and their children. And so that has been an inspiration to us as Pezesha to continue with the journey we are doing, because that money goes back to many other Kenyans who are looking to grow themselves. And so that's why we have been on the journey of Kenyan to Kenyan campaign, in really using that money to continue to help other Kenyans. And we realize that peer effect has continued to help us to not just educate our borrowers how important it is for them to pay their loans, but also for them to know that if they pay back, it's going to help another fellow Kenyan who's like them to then receive the same amount of money and have a better living standard in their own community. And what that really does is a ripple effect of an improved community and in turn an improved economy that all turns out to be an improved generation.
Well, that's a good place to end, I think. For people who are listening and let's say they want to learn more about Pezesha, or maybe put some money into Pezesha or get a loan from Pezesha, what's the best way for people to sort of find out more about you?
Yeah, so you can go to our website, Pezesha.com, which has details about how to go about either being a borrower or being a lender. And we will be continuing, through our social media platforms, as Facebook especially, we're always rolling out new campaigns about helping borrowers to grow up the financial ladder. And so please follow up on our social media as well. We're very, very dedicated about this vision of really bringing the unbanked to be part of the formal financial system. And so, if you follow us there, you'll be able to also see some of the work we are doing, and also with our partners such as CGAP, DFS Lab, which is backed by Bill Gates Melinda Foundation. And we are also doing a lot of work with Google. And so we will be sharing a lot of that information through our social networks and also through our website. So again, reach out to us if you're interested to work with us on learning more. We will be, of course, happy to share, what we've been up to and how we continue to grow. And if you think you have value to add, please join us in this journey. It's an exciting one. It's challenging. It's ambitious. But we believe we're doing the right thing at the right time and with the right people. Because at the end of the day, it's going to be all about people. And so, it's the people who are going to take us to the summit. So we want people who are, with us and they believe in what we're doing to join us and work together with us.
Sounds very good. Cool. Well, Hilda, thanks so much.
Thank you very much.
Before we head, just a quick moment to say thank you for listening. You can see show notes for this episode by heading to www.samfloy.com/podcast. That's samfloy.com/podcast. If you'd like to learn more about the podcast and stay updated on future episodes, as well as a few other things like behind the scenes pictures, then please check out our Facebook page. Search for the East Africa Business Podcast and you can like it from there. Finally, if you felt this was a good episode, then please do leave a rating for the show on iTunes or wherever you get your podcasts. It helps others like you find the show, and I, for one, would really appreciate it. In any case, have a great week and speak to you soon. This episode was brought to you by The Economist Events, who host over 80 events annually in over 30 countries on topics that convene world-class thought leaders on a range of strategic business issues. To find out more, head to events.economist.com.